Hi friends, today we are going to study house property, taxable income from house property, 14 marks from 2019 paper, 10 sum. It is very simple. First we have to write the format, computation of taxable income from house property, previous year, assessee, name of the person, status if any, particular, house 1, house 2, house 3. So next one will be use of house property. This is let out property, this is let out property, this is self occupied property. There is a small trick where if they have given self occupied property, we are going to write nil for everything, still we get NAV. NAV is net annual value. We shall start the sum now. Municipal value or fair value. So in this two, whichever is higher. Okay, then after we write whichever is higher here, we are going to name it as notional value. Then we are going to take this notional value down and compare with standard value. Here whichever is lesser, we give the name for this as expected value. Again we are going to take the expected value down we are going to compare this with actual value. We are going to take the expected value down and we are going to compare it with actual value. Here whichever is higher. Now this is going to be our gross annual value. There is one adjustment. If they have given unrealized rent, we have to minus with actual value, then write the actual value. Okay. Still here we'll do municipal value is 16,000, then 700. If they have given any value for self-occupied property also, we have to write nil. Okay. Okay. First house is 16,000, then 14,000, then 35,600. We are going to write nil here. Okay. Then fair value. Fair value they have not given in this sum, so we are going to just write nil. If there is some value here, we have to check which is the higher value and write down. Here it is 16,000, 14,000, again nil. We'll take this down again. Now standard value. Standard value they have given 18,000, then 12,000. Again nil here. Okay. Now whichever is lesser. So 16,000 will come again here, then 12,000. Because 14,000 and 12,000, 12,000 is lesser, so we are writing 12,000 here. We'll take 16,000 again here, 12,000 nil. Actual value. In actual rent value, okay, they have given per annum here in this sum, but in some sums they will give per month. If they have given per month, we are going to multiply it with 12. $18,000 and nil. Okay. They have given realization, unrealized rent allowed in the year 1516, recovered during the year of for the first month, recovered during the year for the first house. This we will see later, okay? Now we are going to write it 24,000, then 18,000, okay? After getting this is before vacancy period, okay? Before vacancy period. Now we will minus vacancy period. Minus vacancy period. Only for the first house they have given 2 months they have been vacant. For other two it was nil, okay? 2 months in the sense we have to check with the actual value. They have given per annum. For first house it was 24,000, right? That was for year, but we want it for month. Divided by 12. 24,000 divided by 12, we are getting 2,000. So 2,000 into how many months the house was vacant? 2 months. So 2,000 into 2, that is 4,000. Okay, we are going to minus this with this. Then we are going to get 20,000. Here 18,000. Again nil here. This is gross annual value after vacancy period. Okay, after this we are going to minus municipal tax. Here we have to check whether the municipal tax is paid by the owner or the tenant. We have to take only the owner. If the payment is done by the owner only, we are going to take. If the payment is done by the tenant, we are not going to take it. Okay, in the sum the owner is paying 10%. So they themselves have given the amount 1,600. Then here they have given 700. This one we are not going to consider. Okay, the other one is if they have given 10% of MV and we don't know how to calculate. 10% of MV means municipal value. This is our municipal value. From this we are going to take 10%. Maybe you'll ask me, it is 14,000, then why they have given 700? They have already given the value, so we are taking. If not, we are going to take 1,400 only. Okay, now the answer what we are getting is our, and now the answer what we are getting is our net annual value. 20,000 minus 1,600 is 18,400. 18,000 minus 700 is 17,300. This is going to be nil. Okay, now we are coming for the last part of the taxable income from house property. Less, okay, deduction under section 24. This is heading. So on this we are going to subdivide with 3 topics, 1, 2 and 3. Standard deduction, 30% on NAV. Okay, NAV is net annual value. Then interest on loan. Last one is previous year loan. In 18,400, 30% is 5,520. Interest on loan was given as 800. Okay. Then previous year loan they have given none. Okay. For 3 months also they have not given. Now for second house it is in 17,300, 30%. It is 5,190. Interest for the second house is 600. Okay, now for everything we have given nil, right? For everything we have given nil. Only for the interest on loan we are going to take the value. Okay. However, we are going to pay the interest on loan if we are occupied or we are going to let out property. If we are entering the house, if we are giving the house for let out also or for self occupied also, we have to pay the loan, right? So for everything we have to pay the loan. That's why we are taking here 2000. After we are deducting this NAV with the deduction, we are going to get 18,400 minus 5,520 minus 800. We are getting 12,880. Okay. Then 17,300 minus 17,300 minus 5,190 minus 600. We are getting 11,510. Then this 2,000 will come again down. It is in minus, so we are taking it in bracket. We have left other one, right, which is unrealized rent, which is recovered. Okay. Now this recovered amount we are going to take it here. Unrealized rent recovered. This was only done for first house. Okay. That is 4,000. Yeah. 4,000 minus 4,000 into 30%. Okay. The value what we are getting, we have to minus with 4,000. 1,200 here and 4,000. 4,000 minus 1,200, we are getting 2,800. We are going to add this amount because we have got the amount. Okay. It is 14,880. It is 14,880. Then here there is no value, right? So we are going to write nil. This amount is going to come again down. 11,510. Then 2,000. Now how to calculate total? This is only for particular. This is only for each house. Okay. Now we have to calculate for 3 house also. Then we are going to get 14,880 plus 11,510, then minus 2,000. We are going to get 24,390. 24,390. This is our taxable income in house property. Thank you.